Good morning, traders. Welcome back to the Everyday Growth Advisors webinar series. I hope you guys are having a great Thursday. Good morning to everybody. Welcome. Today we are going to go through some trade confirmations. I'm going to try to get this done as quickly as I can, just to keep these live streams as succinct as possible. The webinars are exclusively bite-sized pieces of the EGA mentorship course that I put together in order to bring more value to our community on YouTube instead of throwing out all these fishes. I like to provide good, valuable content so you guys can learn, compound, and grow with the Everyday Growth Advisors mentorship. Thank you, Sean, for the 99 cents donation. I appreciate you very much. That is very much going to buy me a third of a coffee. But I do appreciate it, honestly. It is really appreciated. I'm just kidding. Totally kidding. Okay, today we are going to go through various different types of trades. So I'm going to break it down for the different types of trades that are the ones that you usually do. We're going to go through scalps first, then we'll do day trades, and we will do swing trades right after. And all three of them have different ways to look at for your breakout strategies. And when I talk about trade confirmations, what am I actually talking about? I'm talking about what do you look for when you are engaging in a particular trade, right? What is the time frame? What is this? What is that, right? So I want to go through. I know we individually broke down, all of the different kinds of trades in my growth webinar playlist, but I want to take some time out to break them down even more carefully so that you have a great understanding of how to look, what to look for when you are trading these things. Okay, so we'll start off with scalping. Okay. And scalping is, it's a pattern breakout strategy, okay? And there is a specific way that I like to, engage in a scalp trade. Generally speaking, obviously for options trading, scalping is a very fast process. So you're in and out within a couple of minutes at times, and you don't want to let your scalp become into a day trade, especially because scalping involves higher position sizing, right? The main idea of a scalp is that you take on more risk to achieve a faster gain, okay? And so this can be done through a variety of different ways, right? So with scalping, you're looking at a couple of different things. First of all, high risk, which is a increased position size, okay? So your position size is going to be more expensive, all right? The second thing is, generally speaking, there are two different types of traders: people who engage in delta stacking, and also people who engage in gamma washing. I like to call it gamma washing because gamma is the measurement of how quickly delta is changing, right? So think of gamma as like the wife, overprotective wife, and delta is the husband. Whenever delta is doing something, gamma's watching very closely, and so she wants to make sure that delta is in line, okay? So what happens when you take a out the money contract and you are scalping, as the contract moves towards your strike price, the gamma of this contract rises very rapidly, causing a spike in delta, or you can say it's vice versa, okay? As delta goes higher and spikes, that causes gamma to rise, and hence you look for high gamma contracts that will give you a nice little delta stack, okay? Now, this gamma washing would be a out the money strategy, and a delta stacking would be a in the money strategy, okay? The idea is when you're taking scalps, you want to make sure that the contracts are in the money so you can achieve a faster stack of delta. Since you're in and out of the position so quickly, your aim is to stack the delta as quickly as possible, okay? So in the money options have a higher delta, therefore giving you a added advantage of stacking those options quickly, okay? Now, the scalping method is reliant on momentum and volume. This is your main key feature of scalps. All right. Together with this, you generally want to look for options flow if you have a options scanning software of some kind. Okay, options flow and breakouts. Okay, so this is kind of your 5-step process to validate or to make sure that you know everything about scalping. And so let's try and find a setup like this that happened yesterday. I'm guessing maybe, well, Tesla always is a great culprit for for scalp. So let's see. And by the way, what is the time frame? The time frame for scalping, it's going to be always a 1 minute time frame. Okay, now you can use 2 minutes as well. You get more information there, but 1 minute usually gives you a good idea on when you can start to enter a scalp. So over here we can see a scalp opportunity right when the market was right after lunch sometime. This over here is a scalping opportunity. You can see Tesla started to make higher highs, right? Higher highs, okay, and was approaching a key resistance level. It broke out with good volume, okay? And so when something breaks with good volume, this is not the entry. This is not the entry. Majority of you enter the scalp here. And out of this, you usually ask yourself why you don't end up making money, okay? The problem with this is you are chasing a wave that is already in motion. The main idea here for a trade confirmation for a scalp is once you see the volume come in and you have seen a couple of waves, you can see this is the first wave and the second wave, and now you engage on the third wave. On the 1 minute chart, the third wave, you should wait for a pullback, okay, a pullback. And this is actually your entry for the scalp, okay, that is your entry. So once you see the volume, you see a pullback, that is your entry for the scalp. It usually typically is best when you wait for a confirmation and a break, okay? So in this case, this was your entry for the scalp, and any one of these candlesticks here would have been a great entry, okay? Then you write this up, and your stop loss would have been somewhere down here, and all you got to do when you're up here is move your stop loss to break even, and as Tesla moves up, you move your stop loss from here to here, locking in profits along the way, okay? And so that is how you spot a trade confirmation. Now, that is one method, okay? That is a non-breakout strategy, okay? Now, there will be times when you might get a fake out like this over here, okay? This was a fake out. So how do you avoid these? Well, you need to wait sometimes for a break above resistance and consolidation, okay? A break above resistance and then consolidate. This was the resistance over here, the break above the resistance, and then a consolidation above the resistance, validating this resistance as now a support, okay? That's how you can tell if something is worthy of a scalp, all right? Generally speaking. So let's see here. Sometimes you're going to get these happen. You get the first wave, second wave, right? Third wave, breakout, validation. No, it didn't really validate. You can see this wasn't a validation, right? What happened here? First of all, how do you validate? Well, it should have gone like this, right? This is where you would enter on the uptrend, right? So this was actually a fake breakout, right? And you could have told because it went straight down below it, right? So that's how you spot that. There will be other examples where you can tell what's going on, okay? Like, look at this one here, big volume bar, breakout out of resistance, fake out right here, right? This one, you can't help these kinds of situations. These kind of situations help. They happen sometimes. And, you know, you can't avoid them. You just lick your wounds and move on, all right? You move on. It happens from time to time. I got into this same situation yesterday with Roku, okay? With Roku. Look at this. Yesterday, this was a great setup for a scalp trade, all right? So we saw a bunch of volume, all right? Above average volume right here. And we were waiting for the breakout of this wedge that we saw. This was during the live call that we had, okay? So we took a Roku upon the breakout here, okay? And we were in profit, almost $150, all right? We were in a $150 profit. And then moments later, lucky we had a stop loss that cut us out. So I ended up making a $100 loss here. But this is how sometimes the market can play with you. This was upon the NASDAQ little bit of a crash yesterday, okay? So sometimes you can't help it. You get the setup, you get the circumstances, you get the volume, you get the break above the resistance, you get the consolidation above the resistance, you take it, it goes successful, and then after that, it can't be helped. You just got to follow the strategy and hopefully out of 10 times you are right 6 out of 10, right? Okay, so that's your basics of a scalp strategy. All right, let's go and see here. Oh, thank you very much for the $4 donation. I appreciate you very much. For now, I can finally buy a grande coffee. Thank you. Awesome, awesome. Good morning, guys. Welcome in. I hope you guys are liking the stream so far. If you can, make sure you tap the like button, the thumbs up. If you can, that would be great. I really appreciate you guys very much. Good morning, good morning. Top of the morning. BA from yesterday. Hey T, reviewed your last webinar. Can you really quickly go over dual zone? You briefly touched on it, I believe. Walmart chart. Can you see if any is ready for a breakout? Okay. Cool. We'll go through that in a second. Let me finish the webinar first. So, okay. So for scalping, your main trade confirmation is a break above a resistance. For example, as so, a bounce on the old resistance as a support to validate it. Okay, and on the wave up is when you enter. All right. Now, if you want to be super safe, you can wait for a second wave. Okay, a second wave. This is the first wave. The second wave should make a higher high, and you wait for the second wave, and this can be your entry. This is the super low risk averse style, which is usually my style. And then sometimes I get impatient, and then I take it right here. But you can see over here, 2 was actually me waiting for 2 waves. 1 wave, 2 wave, and I entered at the breakout. You can see that, right? 1 wave, 2 waves. And I actually entered upon the breakout of this wedge, ascending wedge, okay, and I waited for a consolidation above the resistance. You can see the setup was perfect. Okay, it was a perfect setup. But when the markets don't cooperate, there's nothing you can do about it. There's nothing. Okay, you set a stop loss and you lick your wounds. That's all you do. Okay, so losses are part of the game. You have to remember that. Okay, now for a scalp, remember that I said there are 2 methods, right? The first is, let's say you take the scalp here. What kind of contract do you go for? You could go for the in-the-money contract, right? We personally went for 171 calls, okay? That were expiring weeklies, right? This gives you a nice little delta stack immediately because the delta of these contracts were 0.63. Every $1 movement up would have given us $63 in profit, right? Because this times 10 is $63. That's your per dollar move of the contract, right? And as the contract goes more in the money, right, then this delta starts to increase and go towards 1, making you $100 per move dollar of the underlying. Okay, that's what you're aiming for. So you have 2 methods. Either you take the 171 or you take the 174 and hope that your contract goes in the money and you benefit on a gamma rush. Okay, that's your scalping technique. Let's see if we have any questions here. Took a big loss in that Roku trade, but that was my fault. I was in profit and instead taking more profits. Okay, great. Yeah, that happens sometimes. It is what it is. Okay, and you shouldn't hold the bag. Remember one thing. That's another thing, right? Don't hold the bag. Okay. Okay, so that's your scalping strategy. Now for a day trading strategy. That is a completely different strategy altogether. The time frame that I use for day trading is between 5 to 10 minutes. 10 minutes usually to get a nice little trend going, and then 5 minutes for entries and exits. Okay, so typically for a day trading strategy, what you want to wait for is a key level of pivot. Okay, I like to wait for either specific things like maybe a key support level or a resistance level being reached. This Roku isn't a very good one here. Let's look at Beyond. I think this was a great day trade yesterday. So here was Beyond yesterday. This was a great little day trade. Right upon the breakout yesterday on the market open, we saw mad volume come in. This was also a great scalp opportunity yesterday, by the way. So day trade and scalp. You could have easily taken this one as within the first, a couple of minutes, okay? But so I have a couple of rules with day trades. And so let me write it down for you. Okay, now for day trades, generally speaking, you are also looking for momentum and volume, okay? Your position size is lower than a scalp. Lower than a scalp, okay? And when I say lower than a scalp, means you're going to go lighter than your scalp position. Okay. Scalp positions are supposed to be high risk, so you take on more contracts. With a scalp position, you would ideally take like 5 contracts, right? With a day trade, you may just want to cut this down to 2, right? Okay. And then what you want to really concentrate on is pivot points. Okay. Pivot points, options flow. Again. And especially for day trades, the type of contract that you want to take is slightly OTM. Okay. Now, the reason why for this one you can go slightly OTM is because you're actually going to observe your risk to reward ratio here. You need to be cognizant that your trade is giving you an appropriate risk to reward, which means to say that for every dollar that you risk, it has to give you more than $1 in reward. Okay. This is a key point of day trading. All right. Majority of people take contracts or take trades without calculating the odds of success, and that's what gets them into trouble. Because the risk usually favors the reward. Okay. So for example, for this one, actually, yesterday was a good one to get into this one for a day trade, right? So look at this. Right at the market open, you saw Beyond get a volume rush, right? Upon this dip over here. Oh, and one more thing about day trades. I typically wait about 30 minutes to 1 hour to engage in a day trade. I wait 30 minutes to 1 hour. There's a couple of reasons why. I like to see how the market plays out, first of all. That's number one. Number two, I like to see how the European market closes. Okay. And thirdly, I like for orders that are trying to fill from the previous day to settle. Okay. So I like to watch all of this and then after that make my decision. So if you're talking about 30 minutes after the market open here, you're talking about 10:30, and this was, if you were watching this at actually 11 something, this was an ideal zone to enter, right? Okay, anywhere here was an ideal zone to enter. After you saw the volume come in at the market open with this high volume buying, you could see, the volume, the OBV here. You can see the blue line that's streaking through my chart. You can see the volume spiked, but when it sold off, it didn't go back down here, right? It didn't come back down to where it was before it got bought up, right? So people are still holding shares. Okay, there are holders here, all right? So this is your confirmation that it's okay to get in, usually, all right? Get in, and let's say you were getting in over here. That was a $141 position, right? So let's say 141. So your strike that you should have gone and aimed for would have been a 143 or a 144 if you wanted to play slightly even out the money, right? Okay. And if you would have followed through with that commitment, you would have seen that towards the end of the day, as a day trade, Beyond eventually broke out, came down. This would have been a test of your stop loss, right? But being smart, you wouldn't put your stop loss here, right at where you are. You would put it a little lower so you wouldn't have ever hit your stop loss. And then it rallied up and you could have moved your stop loss from here to here and from here to here. Come down, stop you out. This was your profit taking zone. Let the stop loss do the work for you. So this was your initial stop loss, second stop loss, and your third stop loss, right? Okay, so 3 times movement, and that would have been a day trade. All right. Now, of course, breaking out of a specific resistance also helps, right? So this over here breaking out, and then it came back down, and then it broke out again, bounced on the resistance. This time, this resistance turned into support, and that was your validation. This could have been a scalp trade here as well, right? So, and you can see that was volume. Right? Okay. So OBV was also pointing up. This was a great setup for a scalp also. Okay. So for a day trade wise, that's how you look at it majority of the time. You're looking for these kinds of setups. Based on how market looks opening, do you see us going down today? I haven't really looked at it yet. actually, to be honest, if you guys attended the stream now, I know obviously we weren't really expecting this, but I did say it a couple of times, and obviously I'm not saying that what I say is prophetic or whatever, but I did say on a couple of live streams so far that there's a possibility that we go like this. Okay, there's a possibility that we go into a sideways channel, and the reason why I said that is because look at how many times in the past that has happened. It happens actually more often than you think. Okay. These sideways movements are actually part of the market conditions. You can see one here. You can see one here. You can see another one here, right? These happen pretty often, okay? So that there's a possibility we keep going sideways here. We buy up today and then sell off again. There's a high possibility, okay? Just as long as we see VIX sell off, that would be a good sign. VIX is climbing, so people are still fearful. A gamma wash is what I want to say. It's something like a taking advantage of a rush in gamma. Okay, the idea is when a contract is at the money, okay, the gamma of the contract is super high, and so you want to take advantage of this. Sometimes. Why? Because a high gamma means that delta is fluctuating and delta can get a nice little push. So playing out the money contracts, and then when those at the money contracts go towards your money, let's say, for example, let's say you're trading at 145 and you enter this over here at the money, but you take a 150 strike and then the stock price goes towards 150, gamma would be very high at the money, and as the contract starts to go further up, delta starts to increase very quickly, which means that you can take advantage of a very wishy-washy gamma. That's the reason why I call it a gamma wash. It's not a real term anywhere. It's just something that I'm making up. It's like a little cute code name, okay? Okay, cool. So your day trades, that's basically what you're looking out for. You're looking for, wave patterns, two waves as well on the 5-minute chart. That's your main time frame that you want to do that on. Okay, breakouts between resistances with good volume, like this over here. This was a great breakout, and then you could see, obviously Beyond's going to open up down here, but I still think it's bullish, to be honest. Okay. Okay, now for a swing trade, the time frame that I like to use is 1 hour. Okay, 1 hour. This is the time frame that I like to use. And let's see if we can find a nice little swing trade. So here's a good possible setup for a swing trade, right? For BABA. Okay, I took this yesterday, but obviously it's going not my way yet. But I saw some out the money flow, like 300 calls being bought, and I wanted to play this, so I took a contract. Okay. So for swing trades, generally speaking, what is the idea? You want to be playing a swing between a swing high and a swing low. Okay. Once you can figure this part out, what you want to do is wait for a confirmation. Okay. So what was the confirmation? This is my first wave, second wave, third wave, right? And you can see I broke out of the resistance. Okay. This is the reason why I took BABA yesterday. All right. I saw it break out of this resistance, and this was my first wave, and then the second wave. This was my confirmation to get in, all right? And it was consolidating above the support, above the old resistance as a support now. Now, as I said, you can't judge what the market's going to do, because what happened after that? The market sold off. BABA's now down at 273 pre-market. But when this thing rebounds and rallies, it's going to go back up there, right? So, and then you can see this is kind of a cup and handle formation, right? It's a cup and handle formation. Okay, so the cup and handle formation is actually a bullish formation, right? And then you'll see what happens here. Maybe we kind of go up here, but the idea is, okay, you wait for the higher highs and higher lows in a swing trade, okay, and then you take this to the upside upon a break with decent volume. Okay. And your idea is to capitalize on the swing low to a swing high. Okay, so what are the characteristics of a swing trade? Oops. If you guys are enjoying the stream so far, I'd really appreciate if you could, lightly tap the like button or smash it, if you will, break your keyboard, do something. I really would appreciate you hitting like. If we can get to 100 likes today, that would be really nice. Amazing content. Smash the like button. Thank you. This is how I start my mornings. Thank you. What's the OBB line? That's a blue line. It's OBV. OBV. On balance volume. It shows you how much your volume is inflow and outflow from that particular trade or stock. Be honest, a great day trade. Yep, I agree. If we are sideways, should we wait to buy hedges? I wouldn't buy hedges at this point. When scalping and day trading, do you market or limit orders? When you're scalping and day trading, you can do. When you're scalping, do market orders. When you're day trading, you can do limit orders. Do you also think we have potential bounce or swing plays forming with? Okay, I have to look at those. Are you setting a stop loss for BABA? Yes, I will set a stop loss for BABA today. What strike and expiration? Might have to snag today. So I took, let me see here. I took $300 calls for 10-2. This is the one that I took. It cost me $3.20 per contract, or somewhere around there. It's going to open up much lower today. But, you can see this is a pretty good trade, right? For a swing trade. Okay, so this is the characteristics of the swing trade, right? You want to do trade between a swing high and a swing low, right? You want to wait for confirmation of two waves on 1 hour. Okay. You want to also watch for break and consolidation above resistance. Okay. And lastly, you want to see volume or momentum. You can also look for options flow. All right, so I guess that can be number 5. Flow. Okay. If you get all of these, that's a swing trade. Okay. So in this specific case here, I saw the flow, nice little wave patterns, break above resistance. This is the third wave. Nice entry on a support here. I took the trade, right? Okay, 1 hour time frame. It matches all the things that I'm looking for, right? Now, if it doesn't go your way, there's not much you can do about it. All right, there's not much you can do about it. But be cognizant of market conditions right now. Okay. So yeah, just keep that in mind. Oops. Okay. So there you have it. Within 30 minutes, I broke down all the kinds of different trades and the confirmations. Remember, these are difficult things to watch out for. Okay. So let's look at these couple of examples that you guys gave me today. Could we maybe have a couple of likes to be smashed? Okay, dual zones. This is something that is EGA proprietary, not discussed by majority of people. Now, look at this point over here. Do you see this is a support, right? It's a support. This is a support zone here. And later, what happened? It turned into a resistance, right? This is a support that turned into a resistance, right? This is what we call a dual zone. Now, the dual zone is a zone that will range from this point to this point. Okay? Where now this was, so you would have 2 points here. This would be your supply zone. And then this would be your demand zone. Okay, so you can see here, this was used as a sell-off, and then now this may be used as a demand zone. Okay, why? Because it's consolidating above the old resistance, right? The resistance is now turning into a support. So you can usually tell when these happen between the two zones, right? This is the red zone, this is the green zone, right? That's how you tell something's a dual zone. okay, you generally will see a very clear, distinct zone at which the candlesticks either bounce as a support here and then turn into a resistance, and then over here it bounces and turns into a support. Okay, that is how you spot the dual zone. Can you see if NEE is ready for a breakout? No, not yet. I don't think so. It's in the middle, so your risk to reward ratio is slammed here. You need to wait. You need to wait for this trade to form. I don't like this pattern, man. It's very wishy-washy. Look at the consolidation. It's crazy. It's ridiculous. I wouldn't trade this right now. Let it pick a direction first, and then this weird ass candle up here. What the heck? Yeah, be very careful about this one. Don't trade it yet. A bull pennant? Where are you seeing bull pennant? I don't see any pennant. What time frame are you looking at? Took a big loss. Okay. Based on market. Okay. Let's see here. Okay. Okay. This is a bit too much here. I'm just gonna do one or two of them. Potential bounce swing plays forming with EA and PayPal. EA. No, not yet. Tell me what's the problem here. You're still bearish, man. Where's the confirmation? You don't have a confirmation yet. This didn't make. Yeah, this is making higher highs, but sorry, higher lows. But is it making higher highs? No. Look, it made a higher low. This is higher lows, and then this is not higher than this. So that is not an uptrend. That is still a continuing downtrend. Okay. And then PayPal. Also the same thing, right? See, the majority of you guys try to catch the bottom, and this is what you got to realize. You cannot catch the bottom. You wait for the confirmation, and then you execute. You have to be patient, okay? How are you going to try and catch this? How do you know this is the bottom? Look where it's opening up at, 176. So is that the bottom? No, it could be down here too, right? It could keep going, okay? So don't try to catch it. That's my advice to you. Okay. Nicola, you think it will go back up today? I don't know, but we sold some on the mentorship program. We sold some puts on this one. We're betting to an upside. So we sold some, I believe, I think it was $25 puts. We sold $25 puts on Nicola. And we're going to receive, I think, $3 and some cents credit on those. We sold 5 of them. And so we like the strategy because we saw the volume come in. And we're betting on the bounce over here in this demand zone here. So we analyzed this together as a group today in the mentorship course, the intermediate mentorship course. Which, by the way, guys, make sure that you keep this date on your calendar, the 9/26. That's the next wave for the beginners course. If you want to join into the beginners course, that will be the date to sign up. Okay, so make sure that you keep that in mind. 9/26, next week, Saturday. Okay. Is Adobe a potential for swing with their recent sell-off and consolidation? Not yet, right? It might be approaching that level, but so look, once again, look, you're here now, right? You're at the bottom. Yeah, this is a zone. Yes, okay, look, this is a dual zone, right? But can you just close your eyes and take this right now? Can you close your eyes and take this right now? Probably not, right? You have to be careful. Why? Because you have to wait for the confirmation. So now it's here. You need to wait for 1 wave, 2 wave. The 2 waves have to have higher highs, higher lows, right? And then once you get that, you can enter into the second wave. Once you have a confirmation. Okay, confirmation. You can't just take this here because you know it's a support. How do you know it's not going to do this and then this? How do you know? You don't know. You need it. You need a confirmation, okay? You need a confirmation. AMD. Any thoughts on Lulu? I'm confused why it's dropping so quickly when everything points to it still being a decent buy as far as I can tell. Are you sure? We did a intrinsic valuation on Lulu and the stock was overvalued. Go look at our live stream, I don't know, a week or two ago. We did an intrinsic valuation on the stock, and I believe the valuation we came out with this stock was much lower. I'm not surprised at all. the stock was clearly overvalued. So if you go into our videos here, you can go down, go here to Lulu Fundamental Wednesday, skip through all this. Let's see what we came out with. I'm pretty sure we came out with the valuation here. So let's see. We came out with a valuation of $200, okay? And right now, the stock's trading at 300, down from 400. If we just follow the things that we call out on this live stream, we would all be super rich, to be honest, okay? Our valuation of Lulu was $200, all right? Based on the intrinsic valuation. That's what we came up to. Boy, oh boy. I don't know why we don't follow our own, call-outs here. We should follow it more often, to be honest. 4-hour chart for NEE. Okay, I didn't see the pennant though, unfortunately. Not actually trying to purchase Lulu, just curious. No, I feel you, but based on our evaluation, it was overvalued. Okay, so that's the idea. Thanks, no problem. I think SNE consolidation is looking sexy. If you want to give your thoughts, SNE, Sony. They're releasing the Sony PS5, right? Yeah, so this one, let's see here. So this is your dual zone here, right? This will be the key level to break here, the key zone. So for Sony to go bullish, what you want to wait for a confirmation here is a move above this zone, okay? And you see the moving averages too, right? You can see the moving averages. What will happen eventually is that, and then if we can get a break above, come down, validate, bounce on the moving average, and start making another wave up, this is our entry. All right, for Sony. That will be your entry. You got to wait for the setup. I've taken both courses. If you like webinars, you will love the courses. Nothing better out there, in my opinion. Thank you very much for saying that, Daniel. I appreciate you very much. Yeah, for people who are, who like the webinars, I say take the course. It's extremely helpful in your trading strategy. Is holding Apple 135 calls 0121 still a good idea? I'm down 60%. It depends on how much you can stomach. For me personally, the down 60%, 50% for a leap, it doesn't matter to me. For me personally, the stock is intrinsically undervalued. I will take and hold that position for as long as need be in order to turn a profit. So. Oh, this might get ugly very quickly here. If Nasdaq breaks this, this will get very, very ugly. Let's see if we're going to get a bounce here, because this is going to get very ugly if we break. Let's see. All right, well, that concludes the live stream today. I can't believe we have almost 110 people watching. Honestly, if you could just take a second out of your day and smash the like button. If you don't want to donate anything, don't want to show any love in any way, don't want to type on the chat, all you could do for me to help this reach other people is to hit the like button or the thumbs up that you see on your screen. This little button here, that's all I really need you to hit for me, because that's what helps this video reach other people. And that's the only thing that we want to do here. It's to provide free education for the masses. So if you can take a time out of your day and just do that for me, I would really, really, truly appreciate it. It means a lot to me, okay? Because I want more people to be able to access this content. All right. Okay, well, that is the end of the stream today. I appreciate you guys taking your time out to be here today. Have a great day. Make sure that you tune in tomorrow. We'll do a recap of the entire market. I'm also planning to do a little bit of a breakdown of the FOMC meeting yesterday. I haven't really caught up on the news yet, but I will today, and I'll have something for you guys tomorrow. I still am holding all my positions as they are. Some of them are down more than 50%, but guess what? I am not really that phased. Okay, this market sell-off can go forward, it can go crazy, it can continue going, but it will be a point where it will turn around strongly. Okay, and we will not see another crazy sell-off. I don't think that's possible, but let's see what happens. Okay, we're so far smashing through all these levels, which is actually quite scary, but to me it's not like I can stomach it. I have contracts that are far away expiries. Once the fear is over, people start jumping back in, it'll be fine. So just gotta hold on. I know it's a tough moment. That's the reason why we never buy short expiries to begin with. Okay, this is the main reason why I get very I don't want to say angry, that's not the right word, but when people come to the chat or they give me a breakdown and they give me a short expiry and it's a swing play, that's obviously one of the reasons why I always go hard, because you got to realize when something like this happens, there's nothing that prepares you for it. Okay, nothing. All right. And with that, I want to say thank you guys. So no, I have not sold Starbucks. I'm still holding Starbucks. I'm holding all my positions, man, all of them. All right. So we will see what happens, and as the risk flows back into tech, then we will decide what we want to do. So have a good one, guys. Peace out, and I'll see you tomorrow for live stream. Have a good one. Bye.